some point, almost everyone needs some type of insurance. When advisors sense that need, but also need guidance in developing the best possible plan, Low-Load Insurance Services stands ready to serve. Our service-oriented group completes a preliminary health screening interview to determine the underwriting category, and then provides the advisor with multiple quotes from highly rated companies for term, universal life, annuities, long-term care, and disability insurance. We also do in-force policy reviews. We design services for fee-only financial advisors. We handle the paperwork for the clients, and our experienced case managers make the process easy and pleasant. Please hold for a moment and someone will be with you. Low-Load Insurance Services is located at 2907 West Bay to Bay Boulevard in Tampa, Florida, and our office hours are 9 to 5, Monday through Friday, Eastern Time. Please visit our website at www.llis.com and see what other services we can perform for you. Low-Load Insurance Services is often quoted in Money Magazine, Kiplinger's, and the Wall Street Journal. Don't forget, we're the advisor's insurance advisor. We do appreciate your call and encourage you to stay on the line for our next representative to discuss the services that we can provide for you. Thank you for holding. At Low-Load Insurance Services, we are known as the Advisor's Insurance Advisor. Our advisors are members of the FPA, NAPFA, Garrett Planning Network, and the Alliance of Cambridge Advisors. We have developed a keen sensitivity to the needs of fee-only financial advisors. As a result, Low-Load Insurance Services offers a full range of insurance support services that features web-based quote requests and fast response times that set a new industry standard. Please continue to hold, and a representative will be with you in a moment.
Good afternoon, everyone, and welcome to Low-Load Insurance Services' final webinar of 2011. We would like to apologize for the late start. We had a bit of technical difficulty with GoToMeeting, but we should be all set now. Again, it is our final webinar of 2011, and today's presentation is a compilation of questions that you, the advisors, have raised throughout the year. You asked, and we're answering. The webinar will focus on all of the insurance solutions that we help your clients with: term, perm, long-term care, disability, annuities, and some statistics and some taxation information. The next slide will tell you which order we'll be presenting in today. Today's webinar will qualify for 2 CEs, but please remember that you must be logged in for 100+ minutes. We'll take all questions at the end of the presentation. If you raise your hand on the screen, we'll unmute your individual line. As a reminder, this webinar is being recorded and will be posted to our website within a week. So if your colleagues couldn't attend today, please let them know they can view the presentation in about a week. We have many presenters today, all of our product specialists here at LLIS. But to get it started, I'll turn it over to Judith Maurer, our CEO. Judith.
Good afternoon, everyone. This is Judith Maurer, and I'm excited about hosting this 2-hour CE on insurance matters. One of the things that advisors tell us they like most about us and value most about Low-Load is our accessibility. You can call anytime and ask more detailed questions about what we're going to review today, but this is an opportunity for us to answer the questions that you've asked during the course of the last year's webinars. So we're going to share our insurance expertise. We are good at insurance, and as we always say, we're not your competition. We're certainly not doing financial planning or accounting, and we're glad that, that you're here to share this wisdom with us. We're going to go through the questions that we were asked by advisors, and here's one I'm often asked. just exactly what products can you help my clients with? And I'm reminded of our friend who worked with us on disability and long-term care for 10 years and just found out recently that we offered term insurance. So term insurance is important. We have term insurance with guarantees for 10, 15, 20, 25, 30 years. We also have new term UL combos, and what's unique about this is that it allows 1035 exchanges from smaller old policies into a term policy to prepay the premium. So you might be able to have a paid-up 10-year term, 15-year term, or 20-year term from an old life insurance policy. And we offer permanent life insurance policies. These are the kinds that clients buy because they want to have a death benefit when they die, and we don't know when that event will occur. These products are universal life, guaranteed universal life. We sometimes call it GUL or no lapse or term for life, but those premiums and death benefit are guaranteed. We also have survivorship life insurance, which of course it covers 2 people. It's sometimes called second to die insurance, but no death benefit is paid until the second death. We have a complete stable of annuities, deferred, immediate, fixed, and variable. We offer long-term care insurance and disability insurance, including disability buyout, retirement disability, and business overhead insurance. We also have some newer products available for your review, critical illness insurance, longevity insurance, and of course life settlements. Each of these products on this page could have their own whole webinar, and some of them have, and you'll find them on our website. Another question advisors ask is, tell us some statistics. We'd like to know how many people really collect on term insurance or really collect on whole life insurance. Well, there are lots of statistics out there about the insurance industry. LIMRA, the Life Insurance Management and Research Association, specializes in collecting insurance statistics for the industry. I'm going to share a few of those interesting ones with you. This is about term insurance, and LIMRA says that 42% of all life insurance policies purchased are term insurance, but that less than 1% of all term policies result in a death claim. And our caution would be, beware of that statistic. Some term policies terminate because the policyholder converted that policy to permanent. They may have had a 10-year term policy and in the 9th year developed a terminal illness, so they needed to keep that policy for a few more years. They may have converted that to permanent. A significant amount of term policyholders replace existing coverage with a similar, less expensive plan. Someone may have bought a 20-year term policy, for example, 10 or 12 years ago, and they may be able to buy a new 10-year term or a new 20-year term if they still need their coverage that long for less money, simply because the rates have been reduced. And sometimes people let a term policy lapse because the need for protection is diminished. It's interesting that Low Load Insurance Services has been in business for 13 years, and the only claims we've ever had were on term insurance, and they were all young breadwinners of families. We've had a number of deaths occur on a survivorship policy, but not yet the second death. And those primarily are designed for transferring an estate. So those at some point will probably result in a death. But 40% of all whole life policies have actually lapsed after 6 years. We don't know the reasons for those. Probably some people just simply get tired of paying the premiums, or they're tired of surrender charges. And we don't know how this may change now with the advent of the guaranteed universal life policies, when the premiums are guaranteed and the death benefit is guaranteed. 89.5% of all universal life policies do not mature in a claim. And again, this may change with the advent of GUL. Now for a couple of interesting long-term care statistics. The two largest long-term care insurance claims today each exceed $1 million. And in 2010, the 10 largest long-term care insurance companies paid more than $10.8 million daily in benefits to 135,000 policyholders. This was an interesting statistic, and Jerry Skapiak is going to talk more about annuities toward the center of this program. And this statistic is that 90% of annuity owners still own the first annuity they bought, and only 3 out of 10 owners have withdrawn money from annuity they own.